All right. Hi, good evening, everyone. Welcome to our latest webinar titled Rev Up Your Returns. I'll just let some of the participants to log on to come in first, because I see quite a number of participants are just logging in, right? I understand it's 5 p.m., right? Market has just closed. Some of you are still at work, but I appreciate the time that you actually take to join us here today. And I have a very special guest here today with me. I'll just give it a couple more moments before we actually begin and kick off. All right. I hope everyone is doing well and is safe, given the spike in COVID cases again and the different variants and just the hot weather right now. Okay, I see a lot of you coming in, right? Let's just give it a bit more. Okay. All right, I think everyone is almost in, right? Okay, so hi everyone, good afternoon. Today we have a webinar titled Rev Up Your Returns, right? So why do I say Rev Up Your Returns? Because we will be talking about the exposure to Hong Kong stock market using structured warrants. So today, I'm very excited to be here with Sonia Lee, who is the head of retail research from Maybank IB Securities Hong Kong. Sonia, would you like to say a word or two before we kick off?
Hi everyone, I'm Sonia Lee from MIB Securities Hong Kong Limited. I'm head of retail research.
All right, that's a very good introduction, Sonia. And also just a quick brief over Sonia experience. She's almost 9 years in right now with Maybank, and she has a CFA, MBA, as well as FRM. So I would also like to introduce myself. My name is Tucker, and I'm a member of the Structured Warrants team here at Equity and Commodity Derivatives at Maybank Investment Bank. So in today's webinar, I'll cover a quick basics of structured warrants and Hong Kong share structured warrants, and how as investors like you can capitalize on them by just using your local CDS account. So given the optimism over China's March home price data that showed prices rose at its fastest pace in 21 months, and signs of corporate earnings recovery fueled the HK market today ahead of the release of its first quarter economy data. So the goal here today for us, right, is to share our insights and expertise with you. And we hope that by the end of this webinar, you will be equipped with the knowledge to make informed investment decisions. So I will be kicking off the session first for the next 20 minutes. And following that, Sonia will take over and provide an in-depth fundamental analysis of the Hong Kong listed shares. So once again, thank you very much for joining us today, and we hope you enjoy the webinar. So a quick disclaimer before we actually start. Any decision to invest in structured warrants should rely on your own evaluation to assess the merits and risk of the investment in the structured warrants. If you are in any doubt as to the action or any decision to be taken, you should consult your own professional advisors. Okay? So let's begin, right? I would like to start off with the two types of warrants available in the market out there. So the key differences between the two are actually we have structured warrants and company warrants. So let's begin with the issuer. So structured warrants are issued by third-party financial institutions such as us, Maybank IB, whereas company warrants are issued by the company of the underlying share itself. Secondly, you may see that there's call or put warrants available in the market. So structured warrants can be issued either as a call or a put warrants over an underlying share, index, or even an ETF. Whereas for company issued call warrants, they are only issued as part of a corporate fundraising exercise. So reason why company issue warrants is to raise capital and encourage investors to buy their stock in the company in the future. And when it comes to structured warrants and company warrants, it is important to know that whether is it cash settled or physically settled. So for structured warrants, holders of the warrant is due for cash settlement if it expires only in the money, okay? If it expires in the money, the holders of structured warrants will be receiving cash. However, for company warrants, it is physically settled, whereby when it's exercised, new shares are issued and delivered to the investor's account. So then, just for your information, there are actually two styles of options, which includes warrants, and the key difference lies when it can be exercised. So for structured warrants, it is European style, whereby settlement is at maturity, whereas for company warrants, it is American style, and it will be exercisable at any time within the period until the expiry date. So now, how do we tell between the structured warrants and company warrants listed in the market? Or should I say just the naming convention, right? So this we can note at the letter that is denoted after that. So for structured warrants, a call warrant is being denoted by a C, whereas put warrants is being denoted by H. For company warrants, straightforward, W denotes company warrants, okay? And lastly, liquidity. So given that structured warrants are actually issued by third-party financial institutions such as Maybank IB, we are the designated market maker to provide liquidity. So we are also known as liquidity providers to allow investors to enter or exit the trade easily. So Maybank IB, of course, is the market maker for Maybank IB issued warrants, and all the prices are transparent because you can visit our Maybank Warrants website at warrants.maybanktoyou.com.my to view our live matrix to see the indicated movement of the structured warrants in the market at every level price of the underlying. While for company warrants, it's really dependent on the liquidity based on natural supply demand of the market at any given point of time, okay? So now that we are clear on the two types of warrants available in the market and the differences between the two, without diving in too deep, I would just like to share the three critical indicators that you need to remember and know when it comes to trading structured warrants, which are sensitivity, effective gearing, and time value. So collectively here, we can refer it to SET. So when you know these terms, it is just ready, set, and you go, okay? So to simplify these concepts, sensitivity refers to the speed at which the warrants move, while effective gearing denotes how much the warrant moves, and time value represents the duration of the warrant's lifespan. So in order to see the sensitivity take of the warrant, investors can use live matrix, like I said earlier, to view the responsiveness and the indicative bid and ask prices of the warrant at every underlying bid and ask levels. So the live matrix is a useful tool for you to quickly and easily see how the changes in the price of the underlying will affect the value of the warrant. So by using the live matrix, investors can actually assess the potential risks and returns of the warrant in different market conditions and make a more informed investment decisions. And secondly, we have effective gearing, which is actually a double-edged sword, because the higher the effective gearing, meaning the higher the risk, which result in higher reward potential. So a quick example is a 5 times effective gearing translates to a 5% movement in the warrant for every 1% movement in the underlying. So every 5% move is due to a 1% move in the underlying when the effective gearing is 5 times. So if you are aware, I said movement, but I did not say up or down, because when the warrant goes up, it goes up 5%, but when it goes down, it will also go down at the same metric of 5%. So both sensitivity ticks and effective gearing are publicly available on our warrants website. So now the last one, time value. This actually refers to the value of a warrant beyond its intrinsic value. So as the expiration date of the warrant approaches, the time value of the warrant actually decreases, which potentially impacts the investment's profitability. So investors like you and I should be aware of the time value of their warrants and can refer to the expiry date to gauge how long they wish to hold on to their warrants. Okay. So I've covered quite a bit in quite a short span of time. So a quick FAQ that most investors will ask is, number one, is structured warrants Sharia compliant? And also, can technical analysis be done over structured warrants? So to answer the first one, the short answer is no. Structured warrants is not Sharia compliant. So for those investors here today who only invest in Sharia compliant shares, please take note that structured warrants is not compliant to Sharia standard at all. So do not be mistaken by the fact that where company warrants, when they are Sharia compliant, because the company underlying shares itself is Sharia compliant, that makes the company warrants Sharia compliant as well. So the key difference here as well, structured warrants is not Sharia compliant. Company warrants is Sharia compliant only when the company underlying itself is Sharia compliant. So for the second one, you may have wondered before whether technical analysis can be done over structured warrants chart. Simply put, technical analysis should be done on the chart of the share itself, as it can provide you a clearer picture of trends, support, resistance, price action of the shares over time. So this makes technical analysis possible and more accurate. So technical analysis is actually a way to form a view of the direction of the share, and that would influence in your decision to either buy a call or a put warrant and not the other way around. Okay, so I hope that clears up the most common misconception or FAQ that most of you may have. So now let's get into the more exciting part of the structured warrants listed on Bursa Malaysia. So for those who are unaware of the lot sizes in Hong Kong, some shares listed in Hong Kong Stock Exchange has their own respective lot sizes. So special lot sizes on the Hong Kong Stock Exchange refer to lot sizes that are specific to certain shares. And these lot sizes are determined by the issuer of the shares and may vary depending on the shares being traded. So for example, some shares have a lot size of 500 shares or 1,000 shares instead of the standard lot size of 100 shares. So these special lot sizes are designed to accommodate the specific needs of the issuer and the investors trading the security. So the reason for the use of these special lot sizes is also to help facilitate trading in shares that may have a lower trading volume or liquidity. So this allows investors to buy or sell smaller amounts of the security without being subject to the higher trading costs associated with those shares. Okay, so it is important to note that not all shares traded on the Hong Kong Stock Exchange have special lot sizes, and it's up to the issuer of the shares to determine whether a special lot size is required. So therefore, when investors trade or purchase Hong Kong listed shares, they should also be aware that trading in special lot sizes would mean different units of shares received on the back of one lot. So here's a table that lists out some of the common names that you may see over Hong Kong Exchange. So when investors refers to one lot of JD.com listed in HKEX, they are referring to 50 units of shares. Whereas if they are referring to one lot of BYD, it means 500 units of shares. So therefore, with the Hong Kong share structured warrants listed on Bursa Malaysia, investors don't have to worry and remember the different lot sizes of different shares, whether it is 50, 200, 1,000, because these structured warrants that are listed on Bursa Malaysia are subjected to the regulator's board size of 100. So on Bursa Malaysia, for the Hong Kong share warrants, one baht lot will always be equivalent to 100 units. So that's the exciting part that we have here that we can offer as Maybank IB issues Hong Kong share structured warrants. So now, I would like to also share the 6 advantages for you to use Hong Kong share structured warrants. So the 6 advantages, I'll begin with leverage with no margin call. Because structured warrants offer investors the ability to leverage their positions, which means they can invest in a smaller amount of capital and gain exposure to a larger underlying asset. This potentially amplifies your return, but bear in mind that it also increases the risk of loss. Number two, low cost or lower capital outlay, because structured warrants are generally less expensive than the underlying asset. So this means investors can gain exposure to a high priced asset, such as a popular stock or index at a lower cost. And number three, call and put allows you to profit from either direction, because structured warrants can be used to take a long position using a call or a short position using a put over the underlying asset. So this means that investors like you can profit from both the upward as well as the downward movements in the market using the call and the put warrant. Number four, we have limited potential losses. Why do I say so? Is because the losses that you will face is only limited to the amount of capital you put up, which is also known as the premium that you've paid for the structured warrants. So when using structured warrants, there is no risk of margin call when using structured warrants as a leverage financial instrument tool. And second last is that it's a share replacement strategy. So say, for example, right, structured warrants allow you as an investor to diversify your portfolio by selling a portion of your current holdings and replacing it with structured warrants to maintain exposure while deploying the excess that you have received back for the other opportunities in the market. And also, it can even act as a hedging strategy. So why do I say so? Is because structured warrants can be used as a hedging tool, especially using put warrant, to protect your portfolio against adverse price movements. So for example, if you own JD.com and today it actually closed in the red, you can consider to buy JD.com put warrant to protect against a potential further decline in the stock's value. And lastly, using local currency such as the Malaysian ringgit. So because structured warrants are traded on Bursa Malaysia Stock Exchange with a designated market maker, which means that they are highly liquid and can be bought and sold easily during market hours just by using your local CDS account and Ringgit Malaysia. So structured warrants provide investors the flexibility to enter and exit positions without the need for currency conversion. So despite knowing the 6 advantages, right, there is a balancing act because we have to weigh the advantages and disadvantages in order to make a better informed investment decision, correct? So for the advantages, okay, we have 3 points laid out. So by using a local trading account is that investors can benefit from a lower stamp duty at 0.1% capped at 200 ringgit. And just for your information, brokerage fees are generally lower compared to foreign trading accounts. And number 2 is that investing in ringgit eliminates the need for currency conversion. So hence, lower capital outlay for you because currency conversion can be costly and time consuming. So Hong Kong share structured warrants allows you to gain exposure to Hong Kong listed companies with a lower capital outlay. And lastly, of course, an active market maker, which makes it very important for investors to enter and exit. So Maybank IB is an award-winning active market maker. Therefore, investors can benefit from the continuous bid and ask offer volume and prices throughout the market hours. So given the availability of live matrix, this promotes transparency, allowing you to time your entry and exit points more effectively. So even though I've spoken about the advantages, let's also touch on the disadvantages. So similarly, 3 points as well. The disadvantages is that investors need to have access to the Hong Kong market research or have a good understanding of the underlying assets to make informed decisions. Lack of knowledge about the underlying assets will lead to poor investment decisions. That's why we have Sonia Lee here today to give you a brief, download of the Hong Kong market as well as the Hong Kong shares as well. So number 2 is that access to price feed. So investors have to be aware that the Hong Kong share prices that they see online, even on Maybank Warrants website or whenever you search for 9988HK on Google, the search engine results that shows up is typically prices that is delayed by 15 minutes. And also last one is that due to severe weather arrangement, Hong Kong Stock Exchange may suspend trading. So investors must be prepared that Hong Kong Stock Exchange may halt the trading session for the day if there's an announcement of severe weather. All right. So these are sort of the factors that you have to go through in your head in order to balance the pros, the cons, the advantages and disadvantages of utilizing Hong Kong share structured warrants. So with that, trading in Hong Kong share structured warrants listed on Bursa Malaysia can present an appealing investment opportunity for those seeking to diversify your portfolio, right? So it is essential to also comprehend the trading process and the crucial considerations when trading these structured warrants. So how do you do so? So the 5 most common questions that we get is, do you need a foreign trading account? No, you do not, because with the local CDS trading account, you have that set up. You can just buy the structured warrants listed in the market. And the minimum trading amount, like I said, is 1 lot, so it's 100 units. So you can buy just as little as 100 warrants, just like all the other Bursa listed shares and the Malaysian share structured warrants. And number 3 and 4, are there any FX risks involved, or do you need HKD? Needless to say, you don't need to have Hong Kong dollar, as well as in terms of the risk, the FX risk involved is that there is a certain degree of foreign currency risk, but this has already been taken into account when pricing the warrants. And also lastly, can I buy and sell anytime? So this is a very important question that most investors may ask, is because if you can buy, but can you sell when you want to take profit? So clients and investors can actually buy and sell anytime, as long as both markets, the Hong Kong and also Malaysia markets, are open. So the team here will post updates for any market holidays or disruption on the Telegram channel Trade with Maybank. So investors must keep an eye on the Hong Kong market conditions and news related to Hong Kong underlying asset of the structured warrant, because changes in the Hong Kong market can impact the potential profitability of the investment. So investors need to be prepared to adjust their positions accordingly. So in conclusion, while trading in Hong Kong share structured warrants listed in Bursa Malaysia can be a rewarding investment opportunity, but investors must fully comprehend the trading process, key considerations, and risk involved. So this is just a quick overview of the difference or similarities between the Malaysia and Hong Kong warrants. One is the shares track, one is for Bursa listed, one is on Hong Kong Exchange listed. Both are settled in ringgit, traded in ringgit. Stamp duty of 0.1%, capped at 200. Settlement style is also the same, being European, and there's also live matrix. So one thing to note is that the market making hours is slightly different, because the market making hours is following the Hong Kong Stock Exchange hours. So that is one key consideration to take note as well. So now, after I've covered quite a bit, I've jam-packed the key things that you need to know. So it's time to make some decisions, right? So over here, you can see the chart is that in mid-March, Alibaba share price was rather flat and range bound, despite that, Bloomberg has reported Alibaba and the market watchdog of Hangzhou, where the tech giant is headquartered, have signed a pact to develop a platform economy. So, but things took a bit of a turn towards the late month of March, given that Alibaba announced that it will turn into a holding company, whereby 6 subsidiaries will be separated into independent firms. So because these different entities will seek fundraising and market listings as China eases its crackdown on the private enterprises. So let's just say with that, you enter into a long position on 13 March using Alibaba C19 to gain leverage exposure when the bid was 12 cents. And subsequently, with the slew of good news over Alibaba and the tech sector in Hong Kong, you decided to hold onto the position up until its peak of 31st March. So at its highest, Alibaba C19 bid was 21 cents. So you closed that position off on that day. So using structured warrants as a financial instrument tool, your position would have gained 75% in terms of percentage, while only risking about 1,440 ringgit to gain an effective exposure of 200 units of the Alibaba shares. But on the flip side, if you had entered into a position using Alibaba shares itself, you first have to convert to Hong Kong dollars. And assuming that you're looking to buy 2 lots of Alibaba shares on 13 March as well, it would have cost you a capital at risk of 9,371 ringgit, while only gaining 20.6% in percentage returns. So therefore, it is important that, of course, using structured warrants would give you a higher returns in terms of percentage while limiting your capital at risk. But you need to have the risk appetite to hold structured warrants between 13 March to 31st March. Of course, the percentage returns here will show that it is much more lucrative than buying just the underlying shares, given that the underlying shares you have to convert to Hong Kong dollars and you need a foreign trading account open and readily available. So I would like to wrap it up and say that once you have your right direction set out, using the right structured warrants, such as in this case, a call warrant, can improve your potential returns while limiting your capital at risk while using only just Ringgit Malaysia as the trading currency. Okay, so I hope that it's a good enough of a example for you. So here are some of the Hong Kong share structured warrants that we have, such as Alibaba, Anta, Bank of China, BYD, Galaxy, Geely, HKEX even, and also we do have JD.com, we have Meituan, we have MGM, and also Sands as well. Okay, so before I close up my session, I would also like to introduce to the viewers here today that Maybank IB has US share structured warrants available in the market right now. And we have names such as Bank of America, Citigroup, and Wells Fargo. So just for your information as well, Citigroup and Wells Fargo announced its results last Friday. And tomorrow night, it will be Bank of America releasing its result. And if you have followed or tracked the US market, the banks were in the green. It was positive. It reacted positively. And their share prices went up last Friday night. Okay. So I hope that you learn a thing or two in this webinar. I understand it is quite a short, jam-packed session. I would like to introduce to the viewers here today that Maybank IB is actually having a quiz campaign to actually test your warrants knowledge. So this is in conjunction as well to the US share structure warrants that we have. And also it's a good chance for you to test your warrants knowledge today after listening to what I have shared with you. So winners of this quiz campaign will stand a chance to win a GrabFood vouchers worth 50 ringgit, allowing you to, treat yourself to a delicious meal after learning more about structured warrants. So thank you very much for your time and attention. I will pass it off to Sonia.
Okay, thank you. Very good presentation. Now we understand what the structured product is, and also introduce our company that have already launched several different kind of structured product, and also we have game to play with to test our understanding on the structured product. And now let's begin in my term. And hello everyone, I'm Sonia Lee, the head of retail research in MIB Securities Hong Kong Limited. Some of you understand my name and also see my face so often because actually we have a regular morning briefing and on a regular basis, and also for our retail research, we will send the dim sum daily retail notes. So if any one of you interested want to know more about there are some updates on the Hong Kong stock market, so please ask your investment manager we can send the retail research notes to you on daily basis. Okay, so let's share screen first. Okay. So this is our topic today. So the opportunity.
Sonia, sorry.
Yes.
Your screen isn't being shared.
Yes. Can any one of you see the screen?
Nope, not anything yet.
Not anything yet. Okay, let me share it again.
There you go.
Very good. Okay, this is our topic, and this is the agenda for today. So we're because if we want to, make good use of the structured product, of course, we have to understand what's going on the market, especially for the Hong Kong stock markets. And also I will cover for the August investment topic because I did several interviews recently, and some of the reporter actually asking question like the tech company and also for the China recovery status, where are we now? So that I also want to cover this August topic to you guys. And also, of course, last but not least is the stock picks and also the sector picks for today. Okay, and for us to understand or we want to know more about the Hong Kong outlook, of course, we have to understand, I will explain that in different angle. I will use the China economic situation now. Also, we'll discuss on the Fed fund rate forecast, and also I will use the technical analysis to try to estimate for the Hang Seng Index forecast to you. And for the China economic outlook, we are quite positive on the GDP growth this year. Of course, we have to know that tomorrow we will have the first Q China GDP forecast with the consensus forecast of 4%. So we still have to keep track on the GDP data analysis. And we all know that at the MPC this year, the China set the GDP growth at around 5%. Actually, this is at the low end of the market expectation. But we do see quite encouraging economic data is that from the consumption and also for other industrial production, something like that, actually the recovery pace is better than expected. And also we saw that the economic work report this year actually is focusing on the job creation and also for the consumption recovery. And so that actually, although the China said the GDP is at the low end of the market expectation, but currently actually some of the street or some Asians also set a quite decent growth for the GDP in China this year. So we can see that for the latest INF, they mentioned that they expect the China economy will grow at least for 5.2% this year, and also next year can grow by 4.5%. This is much higher than when we compare with the advanced other country in the ASEAN and also in the Asia country. And for houses, actually, we do have a forecast on the China GDP growth. We also believe that for the GDP growth for the China this year, we maintain up to 5% this year. Although we believe that for the consumption and also for the travel, that will have a very strong recovery, but we do have to, factor in the weak export, and also we do see the uncertainty on the China property sector, and also we have a little bit concerned of the consumption strength in the long term. But we do see that there will be a favorable monetary policy, as we expected that for the PBOC will continue to cut the triple R in the second half this year. We expected there will be a second round of the 25 basis point reduction. And also there will be a LPR, loan prime rate cut of around 10 basis point in the second half this year. So that for the monetary policy will still favorable to those to the financial market. And what we expected for the Fed fund rate forecast, in the following there will be two pictures that we can see the market, how markets are forecast for the Fed fund rate trend. And for this one, this is from the CMG group. We can see for the Fed Watch 2, this is the interview by some investor or some managers. So see how the investor point of view, how they see for the Fed fund rate will go. And from this, this is what I extract from this from last Saturday. Actually, you can see that more people actually forecasting that for the Fed fund rate will fall at the end of this year. So currently, the Fed fund rate is at the range of 470 to 500 basis point. But at the end of this year, actually the street is forecasting for only around 450 to 474 basis point, or even slightly lower. So we believe that for the Fed fund rate, actually the market is expected that there will be already peak for the first half this year. Not only for the investor or fund manager, and also we can see this one is from the FOMC participant. This is for the FOMC officer, and what they expected for the Fed fund rate forecast. This is slightly different from what we saw from our previous slide, but we do see that although they forecasting are slightly different, because when we see the previous slide is that the street actually is forecasting the Fed fund rate will already stop for the Fed fund rate height, and also there will be a decline in the Fed fund rate. But for the FOMC participant, actually they see that there may be a chance to still have one more round of the Fed fund rate height. But unlike for what we saw last year, is that for the Fed fund rate last year, actually they increased a lot, so that some already have priced in the possibility, for the economic downturn this year. But now we saw that even for the FOMC officer, they are not so aggressively to forecast there will be a Fed fund rate heights for more terms. It's only maybe for more, one more round. So that we do see that no matter from the street or from the investor, fund manager, or even for the FOMC participant, actually we are forecasting that for the Fed fund rate or very soon we are already in the peak, and this is high chance that for us to see there will be a Fed fund rate decline, even not this year, but we do see a very high chance to fall in next year. And what is the technical analysis for Hang Seng Index? Actually, this the graph is from the March 2022, so last year, and we do see that quite a clear picture is that we observe that the Hang Seng Index is having inverse head and shoulder, or we can name it is a head and shoulder bottom until now. So you can see that this is the shoulder, this is the head bottom. So that once the index is able to reach the second shoulder, that is around 22,000, then if it really can break out this level, then it can able to to experience a new upward trend. So we think that from the technical analysis point of view, the index will have a quite strong resistance level at 222,000. But after that, if we really can break out this level, then it will experience another round of the upwards trend. Okay, as I mentioned that we will talk about the hottest investment topic. So one of them is that what was the China recovery spaces, and some of them or some of you may concern that are we approaching to the end of now? So if we really the China recovery stories is already reached the end, then maybe the Hang Seng Index don't have the the investment value. But we do think that this is only the beginning. Why I say that we have several a graph to describe this situation. So this is the graph that from the American. As we all know that after kind of 3 years of the COVID situation, actually you see that different countries have different timing on easing for the COVID-19 restriction. We see that actually for the American, they eased their COVID-19 restriction at the very beginning of the 2021. The American eased their COVID restriction in September 2021. And we saw that in the lower part of this graph is that in the 2022, actually the international travel arrival actually improved a lot. And we also see similar situation in Europe country because after American eased their COVID-19 restriction, actually Europe country follow at the beginning of the 2022. And we saw that 2021 because of the restriction of the COVID restriction, so that the travel arrival actually dropped a lot. But after they reopened the economy, actually the tourist arrival have already uppicked a lot near 6 months later. So the similar situation appear in ASEAN and also Asian country as well. So that we believe that for the China just announced that for the reopening story at the end of last year. So now it's only around 4 months. So we still believe that there will be upticks in many economic activities. So we also could like to show you some graphs to support my view is that, for example, we saw the PMI index for the manufacturing PMI index actually have already uppicked to above 15 level for 3 months in a row. So that we saw that there is a very significant improvement in the manufacturing PMI. But this is not only the case, but we do see another improvement in other services segment. For example, the non-manufacturing PMI that's related to the services PMI, and also for the construction PMI. You can see that the upticks in the number actually improve a lot, not only above 15 level, but also some of them reach to over 60. So that we do believe that not only for the manufacturing, but also for the services, construction, and also for the tourist consumption, all you can name from different segments, actually they have already experienced a quite significant improvement. But what we see from the other country is that this is only beginning, because it takes around 6 months to normalize their economic activity. So we believe that for the China, they can experience the same, and the will, I can't say that will, but the recovery path should be continuous, and also will be improved, especially in the second half this year. So another thing is was the tech company already overweight or overvalued? We can see that there are several graphs here. We are seeing that there are several graphs here. Is that you can see the crackdown of the tech company actually is over, and also this is another news that the China have already released for some online game license. And we do remember that for the previous year, actually for the China, they started to crack down on the tech company, but we see that at the PNC, the official from the PBOC already say that the crackdown on those fintech company is basically over, and also they will promote their internet platform and also encourage them to lead their economic growth and also job creation. So that we believe that for the technology company, they can experience upticks in their earnings in this year and also for next year. And also we can see that for previous year, actually for the gaming regulator, they stopped to issue for the license to some domestic game. But last year the trend is already reversed, and also they already started to approve the online game and also for the domestic and also for the import, so that we see that not only they are saying that they will support for the fintech company, internet company, but also they see there's a inversion in the policy adjustment, so that we do think that for the regulatory issue actually is already eased. And valuation-wise, this is from the A-share tech company. You can see that for previous 10 years, their valuation is pretty high, so that the 10 years average is around 15x times PE ratio, and 3 years PE ratio is around 15x.7. But we see that the industry itself now is trading about 15 times. So this is lower than 3 years average and also 5-year average. And this is referring to the A-share company. But what we saw, for example, Alibaba, and what we named for some company, Alibaba, Tencent, and that is actually their valuation is even lower than 20 times. So that we believe that valuation-wise, they are trading at an undemanding valuation. So we do believe that for the tech company, at the current state, they are not overvalued. Okay, here we comes to the stock picks. And first of all, I would like to talk about for the Macau gaming. And actually, we see a very significant improvement in the visitor arrival in the Macau. So we see that for the 4th Q last year, Macau record 415,000 visitor arrival per month on average. But this year, in January, the visitor arrival already up around already double. And even for February, they more than 1.5 times. So that we believe that for the visiting arrival to Macau should be improved a lot, especially in the first half this year. And also this is for the average daily gaming revenue. So you can see that there is a pickup in this year. And also this is showing for the visiting arrival, no matter for the overnight visitor and also for the same day visitor, they also improve a lot. And the people arrived to Macau actually have already, kind of year to date already near for the total number last year. And actually what we learned from other countries, as I mentioned that for some country, actually they eased their COVID-19 long before the China. For example, we saw that for the US and also for Singapore. And what we see that is for the gaming sector in Singapore and also in Las Vegas, actually they have a record of very strong growth. For example, for the Game Team Singapore, and our company just upgraded this company to buy from Hull in March. The reason is that we saw that for the mass market have already exist for the pre-COVID level. This is not only driven by the effect from the Singapore, but also we see that for the China visitor arrival, there's a return to Singapore. And also here is that for the Las Vegas number, we saw that for the 2021, so last year, the Las Vegas gaming revenue already hit a record high number, or even 7% higher than the pre-COVID level in 2019. So that we do believe that Macau actually will experience similar pattern. And what we see that for the Genting Singapore, you see the share price here is that it already exists for the 2019 level. So if Macau can replicate the same situation, we do believe that for the Macau gaming, for those players can have the ability, to reach to their 2019 level as well. So our first picks on the Macau gaming is the MGM China. And not only is management have a very positive outlook on the mass and also for the non-gaming segment, but we do believe that after the gaming license, the company actually have additional near 200 gaming tables that under for the Macau government allocation. So that we believe for upcoming quarters, actually we hope to see that for the MGM China is able to catch up its market share, and so that we think the market is slightly underestimate for the potential growth for the MGM China. So if the company is able to reach to 2019 level, so we saw that there will be a chance to reach to for the recent high level, so it's around 11.5, and also if it really can reach to 2019 level, that could be around $15 for the MGM account, MGM China. Okay, for another Sands China, this company actually is the market leader, especially in the mass market. Because why is that? Because for the Sands China, they have near 49% or near a half of the hotel inventory, and also they got a very large MICE and also restaurant, retail, shopping mall. So that we do believe that the Sands China is already, positioned in the mass market recovery. And this is the share price movement. And similar cases is that if the company is able to reach 2019 level, so we do believe that in the near term, its resistance level will be at a near current level. But if it can reach outbreak its current level, then the next level could be at around $41. For the Galaxy Entertainment, we also have this one as our topics, but it's only in the near-term investment opportunity. The near-term catalyst of this company is that it have upcoming launches of the Galaxy Phase 3 and also Phase 4. And this project is expected to launch in the second Q this year. And so that, and also the company is in a net cash position. And so that I think in the near term, the company may have some chance to have some short-term catalyst. And you see that because of from the technical point of view, the share price actually is approaching to 2019 level. But we do believe that because at the $62, actually this have already experienced several peak from 2018 to 2021. So we do believe that for the Galaxy Entertainment, the strong resistance level could be at $62. And other topics will be related to the China reopening theme. One is for the trip.com. And this company, we do. I think you guys should familiar with this name, and this is the travel services provider with this 4 different brand platform. And we believe that in the near term, it got a catalyst is the upcoming Labor Day holiday in May. And we also believe that for the travel pent-up demand is likely to further release during the holiday. And also the air capacity actually recover. So we do believe that there will be upticks in the domestic hotel and also for the air ticket volume. And because the share price actually was already up a lot, we do believe that there may be a near-term selling pressure, but we do believe that at least 115-day moving average at around 255 should be quite relatively strong supportive level. So for the one that are interested in this name, but so not advised to accumulate so quickly, you can wait the stock price when it correct to around 255 level. So another name is the Cathay Pacific 293. And this company, we do believe that the company will benefit from the economic recovery and also for the China reopening. Remember that this company actually hold around 16% of the Air China and also 24% of the Air China cargo. So what we believe that for the China reopening, when the Chinese airline company can benefit, this company can indirect benefit too. And also we think that the company can benefit from 2 angles. One is for the strong loan factor, and also there is a recovery on the domestic and international travel demand upticks. And another thing is that in the second half last year, actually we do see a quite encouraging data is that the company can generate cash inflow with monthly inflow at around Hong Kong dollar 1.1 billion. So we do believe that no matter for the financial status and also for the upcoming upticks in the capacity can increase for the earnings, so that we do believe that this company is a lagger under for the China reopening theme. And from technical view, this is for an upticks in the narrow, and so that we do believe that the company actually can experience at a upward trend, and we believe that quite strong supportive level at around 7.3 to $7.5. Another company that is listed in Paris is the LVMH. Some of you actually have attended our period seminar in March this year. Is that I have also comment on this company because we saw that for the China consumer, they have experienced very sales volume, and also they consume more, especially in the luxury segment. So we pick up this company, and we also see that there is a very good operating data of the LVMH. We saw that for the first Q this year, the company actually record high in the revenue, and the company mentioned that there is a return of the China shopper. And also we do see further catalysts on the attractive development potential for Tiffany and LV and Dior market share gain, and also the market leadership position. So you can see that the share price here actually also have already reached to record high. And also one name is the L'Occitane, and this is manufacturing and also sale of the beauty and also well-being product. And we do believe that the company will have a better sales data this year. Do remember that last year the company have some sales decline because the company have closed shop in China and also exit for the Russian business. It have closed around 130 shop and to around 1,400 shop at the end of last year. And we believe that after the China reopen, the company may change its strategy and also resume the shop reopening in the China. So that we do believe that for the earnings this year can record a significant growth for the company. And for technical view, we do see improving trend is that although the company have experienced a downward trend at the beginning of last year, but we do see that no matter for the 14 days of RSI and also for the MACD, they have record upwards trend here. So that there is a trend for the company to experience a short-term movement. Okay, because of the time is running short, we'll briefly talking about some technical names that is for our topics. And one is for the Alibaba. As also mentioned that the Alibaba and the catalyst is that after the company have, for the latest reorganization, we believe that there will be upside for the unlocked value. And also, according to the Bloomberg, actually, one of these logistic arm, China, is preparing for the Hong Kong IPO that may happen in the second half this year. So we believe that this is one of the catalysts for the Alibaba. Oh, so this is the trend. And also for Meituan. Meituan is another topics on the technical name. And we believe that the company can experience recovery in the food delivery segment, especially on the order volume, and also for another in-store segment, for example, for the Meituan Select and also for the grocery, and there will be an uptick in their orders and also will be break even in the 2025. And some may concern of the competitor on the food delivery segment, but we do believe that the impact will be limited because we do believe that the Meituan actually now have more than 17% market share in the food delivery segment. So it is very difficult for other competitor to enter or to frighten for the Meituan position. Okay, and also for this one, I want to highlight for the price show, because I also know that our company have issued some structured product on this one. And this one, the company actually is the second largest short form video players and also one of the fastest growing online platform. Actually, this company is one of the top 3 apps in terms of the time spent share in China. So it's expected that this company have already established a very strong and close bonding with the KOLs and also for the user. And one key highlight for this company is that actually the street is forecasting the company can break even in this year. So we do believe that driven by the stronger live streaming revenue and also for the apps and also for the break-even situation for this company, the share price movement should be upticks very significantly after it released the result. And last but not least, for the Tencent, and actually I want to do comment on the Tencent and also for the NetEase. And for these 2 companies, if choose one, I would like to choose for the NetEase. This is 2 reasons. One is that actually for the NetEase, we do believe that the valuation is cheaper for the Tencent. Valuation-wise, for the Lattice now is trading at around 18 times forward PE versus for the Tencent is around 22 times. And also for the technical analysis, actually for the Lattice, you can see that once it break out for the downward trend, the upwards momentum actually can accumulate. And versus for the Tencent, actually you can see that the upward trend is here. There is a room for it to fall to around 310 level. And also for one of the positive of the Lattice is that because Lattice actually is expand to the overseas market on its online game, and after years of the booming online game in China, and for the street actually now is forecasting a slowdown in the domestic online game segment in China. So that we do believe that the Lattice overseas strategy actually will have a first mover advantage on the overseas online market. So compared with the Lattice and Tencent, we could like to prefer to the Lattice in the first half this year. So this is the end of my part. So we can go to the Q&A section.
All right. Thank you very much, Sonia. You have covered almost 3 main sectors, right? The gaming, travel, as well as technology, right? And also Sonia have managed to cover, on top of fundamental analysis, she has covered a bit of the technical analysis part of it as well. So to all the viewers who are still here with us now, we apologize that it's being overrun for quite a bit, but does anyone from the floor has any questions? If there's no question, Sonia, is there any closing remarks like you would like to share with the investors with us here today?
Okay, and as I mentioned that because actually for Hong Kong retail research, actually we will provide for the regular morning briefing, and also we will provide the daily retail research notes to all of you guys. So if any one of you interested, so please welcome to ask your investment manager or sales that we can send it over to you guys.
All right, thank you very much, Sonia. And also just heads up for those who are still here with us. We do actually post Maybank IBG Hong Kong dim sum daily on the Telegram channel, which is a snippet of what Sonia has written as well. So especially for those who are not a Maybank IB share trading account client yet, this is a good preview of the value added things that Maybank has for you, right? So on top of what Sonia has mentioned in terms of the names such as the gaming sector, such as MGM, Galaxy, Sands, Maybank IB has structured warrants over these 3 names, as well as the technology sector such as Alibaba, NetEase, and also Tencent. We do have structured warrants over it as well. So if there is no more further questions from the floor, from here, I'd like to thank Sonia a lot for taking your time to do this webinar with us, and as well as sharing your insights and expertise as to the current condition of the Hong Kong stock market. Okay, and that is all from us here today. We hope you learn a thing or two with us, and thank you all for joining us here today. Thank you very much. Bye-bye.
Thank you. Bye-bye.
Thank you, Sonia.